Hello guys, welcome to another financial news video. In today's video, we have a lot of things to talk about. The virus situation, unemployment, stock market roaring like crazy, earnings for next week, and so much other important things that has happened. So don't forget to subscribe, smash the like button for the YouTube algorithm, and follow me on my Instagram. The market these last 2 weeks has been roaring off its lows since the S&P 500 is up almost 28% and the Dow Jones 30.39%. We saw Netflix and Amazon at all-time highs and Tesla being up over 100% in the last month. So, did we really already bottom, or is it just the market taking a break from all that weakness and negativity it's been through since February? I do have to say that it's impossible to know because there is so much uncertainty of this virus situation that we can't know how this will end. We still don't have any vaccination or any cure for the virus, and in my opinion, we still need some more weeks to really see the economy starting to stabilize. The truth is that people is starting to feel more confident about the near future because of so many reasons. The first one is that the Fed took some actions to pop up the economy by injecting more money to it, as I explained in my last video. This week that just passed, people already started receiving their stimulus check, and also the loan for small businesses ran out of money already. But Steven Mnuchin, the Treasury Secretary, said that the White House and Congress could reach another deal for Paycheck Protection Program for small businesses because those are at risk of shutting down. That new deal would add about $300 billion for small businesses and $50 billion for disaster loans. The agreement would also include $75 billion for hospitals and $25 billion for federal testing program, which in my opinion is still not going to be enough money for small businesses to be able to sustain if this lockdown situation continues, and they will need to do some more rounds to keep injecting money into the economy so less small businesses go bankrupt. This whole situation just let us know that these businesses are being backed up by the Fed and that they will try to avoid these small businesses to go bankrupt during lockdown. So according to David Costin, Goldman Sachs analyst, the Fed and Congress have precluded the prospect of a complete economic collapse. This policy action means our previous near-term S&P 500 downside of 2,000 points is no longer likely, meaning that he is no longer bearish and that the S&P 500 could also recover to 3,000 points by year end, just after posting its best week since 1974, which in my opinion is being very optimistic for this situation we are currently facing. Just look at how things are right now. When are you going to be able to go back to a restaurant, a Disney park, any shopping center, or even your office? I don't see people spending money on entertainment throughout this year as they used to do before the lockdown. Another reason why we're seeing so much positivism in the market at this moment is because finally quarantine and lockdown are starting to pay off. We have seen less new cases each day, New York hospitalization numbers are dropping, and there are good news about a drug from a company called Gilead which could help improve the situation. But we have to take into consideration that we are in earnings season. There are still huge companies that hasn't reported yet. I'm expecting a lot of volatility in the market during this earnings season because a lot of these huge companies will not be able to show their future expectations. And now, talking about earnings, banks reported their earnings last week, as I mentioned in my bank industry video. This first quarter earnings from banks actually showed us that they were preparing for customer pain. Jamie Dimon, the JP Morgan CEO, said that they were preparing for the likelihood of a fairly severe recession. And you may be asking how they were doing this. Well, banks like JP Morgan and Wells Fargo were setting aside billions of dollars just for possible losses on loans to customers who maybe would stop paying their loans. In my opinion, this is an expected move from banks because businesses could start going bankrupt, and that will create a domino effect, which the most affected industry would be the banks. For example, 24-hour fitness business is currently analyzing several options, including bankruptcy. If they actually go bankrupt, two things will happen, and both things will affect the banks. First, that business has a commercial real estate lease which will no longer be able to pay, and that landlord most likely will not be able to pay their loans. The second thing that will happen is that employees will no longer have a job, which will make it impossible for them to pay for their rents or the loans that they have for their houses. And obviously, there are a lot of businesses at this moment going through the same situation. Also, unemployment numbers just keep increasing like crazy. More than 22 million Americans have filed for unemployment aid since the declaration of national emergency, wiping out a complete decade of employment gains. Last week alone, 5.2 million people filed unemployment. It's a little bit less than last week, which was 6.6 million people. The longer that we take to reopen the economy, the worse it will be. It could actually take few months before the country goes back to any economic normalcy. Hopefully it will be sooner than later, but I don't think it will be next month. It could be something more like June or July. In my opinion, right now, it's too early to completely open the economy without any vaccination or cure. Before going back to work, there's still some things that we need to do. I'm saying this because our biggest worry should be that if we open the economy too soon, we could have a major spike in new infected people, since it's impossible to know who carries the virus and who doesn't. And here is where Apple and Google come. They decided to partner up and create a contact tracing software. This software is an app that will be able to let you know if a person who you just had any physical contact with has the virus. This is probably very essential to stop or at least help to reduce the spread of the virus. Now, the upcoming 2 weeks earnings are going to be crucial for all this, since a lot of huge companies will be showing how they are doing with all this situation. In this pretty mini calendar, you can see that we have lots of company reporting next week, including Coca-Cola, Netflix, Chipotle, Delta, Domino's, Southwest Airlines, Verizon, and Discover. And next week will be even better with Amazon, Google, Apple, Facebook, and Tesla. I do have a video talking about what to expect before Amazon, Netflix, and Google earnings, which I will be linking down below in the description or leaving a tab right here. I still feel a lot of uncertainty with all this. I don't think that we will be able to recover that fast from all this unprecedented situation if we still don't have anything to rely on, and even after parts of the economy reopens, people are going to remain fearful of going out again. So this is not something like we open the economy tomorrow and everything is back to normal. I'm sure that the most affected states like New York will not be able to go back to normal in a few months, and that will continue affecting the economy in the short term. That was all for today, guys. Thank you for watching this new video. I really hope you enjoyed this financial news section. Don't forget to subscribe, smash the like button for the YouTube algorithm, follow me on my Instagram. If you would like to go and check out my other videos analyzing new stocks, they'll be available on my channel. Thank you and see you next time. Another reason why we're seeing so much positivism. For example, 24-hour fitness business. For example, 24-hour business fitness. For example, 24-hour fitness business.